Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about why risk is the new safe haven. And I want to send a special shout out to all my new subscribers. I really appreciate you guys showing your support. Alright, so my disclaimer, the content of this video is not meant to be financial advice, but my own views designed to stimulate thought. Now, the purpose of this video is to share my views, outlook, and perspective. Okay, so now we start with a not so safe haven. Now, in the last 10 years, we saw blue chips outperform small caps, residential real estate outperform commercial, and they should grow in line with each other, a bull market in treasuries and the US dollar. Okay? Now, this is an example of making money by taking the least amount of risk and contributing nothing of substance to the economy. Supposedly, these are all safe assets. The worst downturn is when everyone thinks they're in a safe haven asset and find out that it's not so safe. That's why diversification is so important. See, usually in times like these, people like buying REITs. Oh, but tenants can't pay rents. They like to buy hospital stocks. Oh, but the hospitals are losing revenue due to the shutdown. All right, so here's the outline. First, I'm going to speak on the bond markets, and then I'm going to give you two reasons why investors will be forced to take more risk. All right, so as we speak, the bond market is being destroyed because once the Fed starts buying the way it has been, the bond market will become a zombie like market where the government is the only participant. I don't think bonds will be investable in the near future, especially the investment grade. I think the yields will either be so low that it's not even worth the risk, or the market will be so corrupt that investors will just flee the market and the government will be the only participant. See, initially, bonds fell at the beginning of the crisis. I think the bonds fell like some of the corporates fell like 20%. That's so much for being a safe haven asset. That's not what you expect from the bond markets. Now, in my opinion, the safest bonds to invest in right now are the ones associated with risk. That's your emerging markets, leveraged loans, junk bonds, some of your municipals and your corporates. Especially if you invest in bond funds versus individual bonds. And that's a matter of yield. If interest rates were to rise, the bonds with the lowest yields would fall the most. Okay, so right now we have treasuries at the lowest yields, so those would probably fall the most if interest rates were allowed to rise. All right, so we're going to talk about losses, okay? And basically, good risk management will be the only way to recover losses. And guys, I know we've had a rally, but believe me, we're not going to go back to the levels that we were before this crisis. I don't care what anyone says, okay? So the only way for investors to recover those losses is by taking more risk. All right, so contribution to society. Now, with unemployment approaching 30%, money has to go into risk to get the greatest amount of people employed. Okay, and so things such as new business formations, building well needed housing, mining for metals, exploring for fossil fuels, and infrastructure being built. Okay, now these are the things that are going to contribute the most to the broad society. This will increase the velocity of money. It will also just contribute to the broader society. The past 10 years, it's all been about the 1%, or these tech workers, that's pretty much where all the good jobs have been. When you're building homes on a large scale, everyone gets a piece of it. The construction worker, the architect, the banker, the plumber, the welder, the just a broad amount of people in a greater portion of the population will be able to be employed when you have the kind of investment in risk taken. you know all right, so the next thing is currency devaluation, and governments will continue to lower interest rates and devalue the currency. Okay, and here are the results. Here's going to be the results of that. This will force investors to invest more money. And when that happens, the more money invested, investors will look for a risk reward balance, which will not exist in treasuries that are currently return free risk. Okay? People will be forced to produce. See, everyone speaks about demand, but not about supply. See, what you have to understand is there are some goods that must be consumed. Regardless of the state of the economy, there are certain goods that must be consumed, for human life to continue in a decent form. So you're always consuming. And so currently we have shortages of food, housing, and we also have just-in-time inventory. So in my opinion, there will be plenty of demand for goods and services when this is all over. Okay? All right, so here's my final thought. It's all about risk management over risk aversion. Okay? You have to take risk. You just have to know how to manage it. But scared money don't make no money. You're supposed to be buying defensive assets in a bull market. So in the bull market, when everyone is, the market is going up, that's when you should be preparing and buying your defensive assets then. In a bear market, you're supposed to be buying risk assets. You're supposed to already have your safe haven assets. Okay, so a bear market is for risk assets. Finally, avoid return-free risk. Okay, and I put treasuries as an example, but I believe in the years coming, rental real estate may even, the risk involved and the amount of labor and that you have to put in it, it won't be worth the returns. Okay, so there's other things that are gonna become return-free risk. I would just advise everyone to avoid things like that. So as always, guys, I hope I was able to share some valuable information with you. I hope that you like, share, subscribe to the channel. I have some good content planned for you guys. As I always say, peace to all.